We should just be about there. All right, we are going to re-record something we did a little bit earlier. I'm Carrie Sparks with Pioneer Title. I'm here today to talk with Brandon Hughes about 1031 Exchange. So welcome to Tuesday afternoon. I'm with Pioneer Title. Like I said, I'm your Arizona title gal. I can reach at 602-715-5704. I've got a few things that are going on this week for my customers that are exciting. First of all, Brandon, I mean, that's going to be awesome. And then next tomorrow, Daryl Turner is going to talk about the future of real estate sales, title sales. What does it look like? He's my personal business coach. He's fantastic. So I'm looking forward to that. And then an investor class series is going to start on Thursday afternoon. Again, Andrew Bang from over at Boomerang Capital in Mesa is absolutely fantastic. But if you don't have a current relationship with anyone at Pioneer Title, I'd love to be that person that you turn to for your sales and marketing strategies. Put me to work. I'm never too busy to help somebody, so make my phone ring. But Brandon, do you want to say a little bit about yourself and the company and kind of take it from there? There's lots of stuff as it relates around taxes that people are interested right now. So take it over.
Yeah, I'll definitely jump into some COVID stuff in a bit. But at the moment, just want to thank you again for helping me record this. Sorry about the technical difficulties. And thank you to Pioneer Title for hosting. And thank you again to Carrie for having me on. I think I said earlier, having me on your show. Kind of fun. It's like the Carrie show, and I get to be the guest. So as Carrie said, my name
turned into a show, and I never thought that it would, but I guess it is.
It comes on live. I get the notification. It's exciting that it's me now. But yeah, Brandon Hughes. I'm with Asset Preservation Inc. I'm the Arizona Division Manager. You might know us as API. That's our name that we typically go by, or I hear in the field. And we're a qualified intermediary, which essentially we're the entity that facilitates a 1031 exchange. And we prepare the paperwork, we hold the funds. And note that sometimes I'm going to refer to us as a QI in this presentation. I might call us an accommodator or maybe a facilitator, but these are all pretty much synonymous terms. So in this quick
asset preservation has been around for what, 28 years or something like that?
30 years.
30.
Over 200,000 exchanges. So we've seen a lot, done a lot. Our exchange counselors, who are the people who get nitty gritty into facilitating the transaction, they've been with us for on average about 15 years, and they have teams that work with them. But it's a good group. We've been doing this a while. But this presentation, we're just going to touch on basics. We're not going to dive into anything deep. There's reverse exchanges, which I'm sure you guys have all heard of, stuff like that. Parking arrangements. We're going to touch on those at a later time. Even some different fun like-kind examples. But today's just really the basics. So we're going to go over selling appreciated property, different ways you can do it. Capital gain taxation. That's reasons that you'd want to perform an IRC section 1031. That's Internal Revenue Code. We're going to also just go through the basic A-1 part of that section. We're also going to talk about like-kind real property. It's kind of fun. Like-kind is it's an interesting term. And we're also going to go over the delayed exchange. And the delayed exchange is the most basic exchange, but it really is the easiest to understand and probably the best to get you introduced and comfortable with a 1031 and how to share it with your clients, or even if you want to do one yourself. Following that, we're going to go over some identification rules, some of the time requirements that you have to do a 1031 exchange. These are all things the IRS has given us to work with, or it's like rules, right? Things to work with, but really it's just rules that you got to abide by. And then of course, at the bottom, we got the qualified intermediary, which is us. And I've described a bit about what we do and who we are, but at the same time, I'm going to talk about why it's important that you want to do some due diligence when you're selecting your qualified intermediary. All right, so first up, selling appreciated property. So at the top, we have the 1031 exchange, which is today's discussion, but there are several different things you can do with your appreciated property. Different options. So the second one there, that's section 1033. It's involuntary conversion. So this is property that maybe was destroyed. Think a hurricane, storm, Eminent domain, maybe they're going to build a freeway through where your condo is. The government takes that over, provides you compensation. So it's things like that. And sometimes we get questions on these. We do have a form on that if you're interested, but you don't need a qualified intermediary to do that. So it's just a different code section, and you really don't need a QI for that purpose. Next is section 121. I'm sure most of you are familiar with this one, being real estate professionals. This is the primary residence rule, and it's where you can exclude gain on property where you lived there for 2 out of the last 5 years. Third one there, we got section 453. That's where you pay your taxes as you receive money, so an installment sale. Think money that's coming in every year. So, gradually, maybe a balloon payment could be at the end of that. And your taxes, you receive the funds. And finally, we got section 721. And for those of you that work with commercial property, it could be if someone wants to contribute property to a REIT, so in a real estate investment trust, and there is a method of tax deferral with that too. So we're not going to go into those bottom 3, but it's good to know that you got a few different options and kind of where 1031 sits in here. So next slide. Capital gain taxation. So why do we want to defer taxes? This slide, it says it all. Because this is an area where a lot of investors, they don't fully understand the taxes that they potentially might face when selling their appreciated property. So there are 4 different levels of taxes. At the bottom here, you can see them. Taxes are first assessed at any depreciation recapture, and that's at the pretty high rate of 25%. Now, the remaining economic gain, it's taxed at the federal level. This is probably what you jump to, or most people jump to in their mind when they're planning to sell their appreciated property. They think of the federal capital gain. And at this, the taxpayer, they're either going to be paying 15 or 20% depending on the taxable income of the taxpayer. So we're going to come back to NIT, the net investment tax, in a second, but let's go over a bit more about the federal capital gain. So as you can see, there's a marriage penalty. So this is where the single filer, they're paying, or they hit the 20% mark at the threshold of 425,000, a little more than that. And typically for hitting the next threshold for a married couple filing, you would expect it to be double what the single filer threshold is. But in this case, it's not. It's actually low. So we call this a marriage penalty. So, while capital gain might be 15% for some, when you're selling a appreciated property, there's a good chance you're going to be in that 20% bracket. So the next tax, that's the third one that was on that list. This is the NIT, or the net investment income tax. This came about, some people call, due to Obamacare. And this is a 3.8% tax that applies to taxpayers who exceed a threshold income of $200,000 for single and $250,000 for married. So again, we see the marriage penalty here. And of course, this is only for net investment income. This isn't, your overall income. And that's a whole different section of the tax code, 1411. And that's typically something that you're going to hit, though, if you're selling a highly appreciated property. Let me go back real quick. The bottom one there is, of course, the applicable state tax rate. And so the state tax rate, it's not too bad in Arizona, where, maybe 4.5% or so. But what we see is a lot of people who are exchanging out of maybe California. And California's got the highest tax rate, the state tax rate there. It's at 13.3%. So they really want to avoid having to pay that. Around the country, there's some other places. We've got New Jersey, New York, Illinois. They all have very high tax rates as well. We know a lot of people, if you have an investment property, you might have it somewhere that you used to live, something like that. Maybe it was formerly a home that you're now renting out. And so you just need to be mindful that you're not just paying tax on the federal capital gains level. You could be hitting all 4 different levels of taxation. What you find is when you add up all 4 different levels of taxes, there could be a significantly higher tax bill or a tax hit than you were initially anticipating. And this means that the taxes, they're going to eat into a large portion of the projected profit from your sale. So you're thinking, oh, I'm selling this property for $1 million. This is great. I'm going to go buy another $1 million property. Well, no. When your taxes come in, you're going to be looking at maybe buying a 600,000 property, But if you're looking to defer your taxes through 1031, you're able to keep that equity. You're making the IRS's tax dollars your equity in the new property. All right, so that's why, a big reason why we see investors turn towards the 1031 exchange. It's a tool. It improves that rate of return and pushes the tax liability into the future. right, we already went through the NIT here. So these are the three options you really have. When you're looking to relinquish your property, you can either hold it. Right now, we see some people, they're waiting, hoping the market maybe bounces back a bit. Maybe there's higher income they can receive from their selling their property. Now, I mean, really, the market seems pretty good. I wouldn't say holdings necessarily, what you need to be doing at the moment, but obviously an option. You could also sell your property. This is just a typical sale. It's what, people do every day. And this is where you just pay the taxes owed. We see some people who really just want to get it out of the way. They want to pay their taxes. They aren't interested in doing forms, not interested in contacting a QI, and that's fine. But as we were talking about, your after-tax funds, they're going to be much, much less. And what's cool about a 1031 exchange is you can keep doing it. So that property we were talking about earlier, the one where, you sold it for $1 million, you only had 600,000 to reinvest. Well, what if you did an exchange? It's $1 million. Now you can go into maybe a property worth $1.2 million. And then you could do another exchange a couple years down the road. You can just keep doing exchanges and keep deferring your taxes. So bottom here, yeah, this is the one we're selling. It's the 1031 exchange. And you defer all your capital gains. So this isn't a tax loophole. It's a part of the IRS code. It's been part of the code for about 100 years now. It's had a few different variations, the most recent, being from the change in 2018. But it's here. It's been here a long time. It's tried and true. And a lot of people really know what they're doing when they're working in the 1031 space. And there's really no getting rid of the tax. You're just deferring it. That's an important part to understand. The only way you can really get rid of the tax permanently, it's kind of morbid, but is if you have been doing a 1031 exchange, deferring your taxes, you leave the property to your children. Let's say you die, you get a step up in basis. And at that point, you're avoiding the tax entirely. All right, so the 1031 code, it's long. We're not gonna read through all of it because it is, it's long, it's complicated, it's yay thick, but this is the meat and bones of it. And we'll read this out. This is section H1. So no gain or loss shall be recognized on the exchange of property held for productive use in a trade or business or for investment if such property is exchanged solely for property of like kind, which is to be held either for productive use in a trade or business or for investment. Of course, the IRS code is just a series of run-on sentences like this, but what's important to see here is it's not a sale. It's not a sale, it's not a resulting purchase, it's an exchange. So you're getting rid of something else, you're getting obtaining a new something. So, and this needs to be like kind. Like kind, that's pretty broad as we were talking about. I think the next slide, we're going on to it. Cool. So you're going to see all these different images fly across the screen here. Some people come to us and they think, well, I have a condo. Do I need to exchange for a new condo? And the answer is no. The IRS doesn't say that that is like kind. The way that they define like kind is it's loose. We see people who maybe they have a home and they decide, well, I want to get a few different condos. So they go from one home to 2-3 condos. You could go from a condo to a commercial building. I mean, you can see vineyards and farmland. They're coming in here as well. We've had people who sit on land for 30 years and then they exchange into an investment condo. There's tons of different things you can do. We also have air rights. A lot of people don't think about that, but that's considered like kind by the IRS. That's the space above a building, say in New York or maybe downtown Phoenix. I'm not sure, we haven't done one, but that I've seen. But it's just space where you could potentially use it, you could potentially develop. And so there, it is real property. And it's like kind for the purposes of a 1031 exchange. There's also perpetual sell easements. So we just did a sell easement the other day, and it was hard to describe it, but it had like a certain deal on the title commitment, and we were able to do an exchange because it's considered like kind real property. There's mineral rights, there's gas rights, oil rights. We see people do exchanges with those. Water rights are big. In Arizona, they can be a bit tricky, but it definitely is possible. So why you guys are here? This is the delayed exchange. It's the most basic type of exchange. As I said, it's also probably the most common exchange format. And I'd say at API around 90 to 95% of the exchanges we do or transactions we do are this delayed exchange. So at the top here, we have our taxpayer or investor. The IRS calls them taxpayer. And at API, we call them the exchanger. So this could be your client, it could be you if you're doing an exchange. And now this is important. if you remember anything from today, hope it's this. No matter who this person is, no matter what you call them, taxpayer, investor, exchanger, this person, they must get their exchange set up with a qualified intermediary before they close on the property. Let me repeat this in a few different terms. So an exchange agreement that the QI puts in place, us, must be in place before the benefits and ownerships have transferred. So essentially, or basically, once you're in escrow and you close escrow, it's too late to set up a 1031 exchange. So you want to make sure you're talking to your exchange group, your QI, maybe as soon as you have an offer or a couple weeks out from close. On Friday, I had someone who called me and she said she just closed on her investment home. She wanted to learn about 1031 exchanges and possibly work to set one up. And it was kind of sad because it was too late for them, but it's really all too common. I get a few calls a month like that where they've just closed or they closed last week and they want to know, what can I do here? And it's not us, it's the IRS. The IRS considers it as having triggered the taxable event. You can no longer do an exchange. All right, so in our example here, or in a chart, let's just keep going with this. This is easy this way. So the taxpayer, they've contacted their QI, their qualified intermediary. The QI prepared some paperwork and a whole list of documents. And through essentially the assignment of the contract, the qualified intermediary has stepped into the shoes of the taxpayer. So they sell the relinquished property to the buyer, the QI does. And the QI becomes, in a way, the seller. At this point, the QI receives funds from the buyer, and the QI instructs the closing officer to directly deed the real property from the taxpayer to the buyer. So now the QI has the money, and the QI sits on it. This is the start or day zero of the exchange. At this point, this triggers the exchange period. The taxpayer has 45 days to identify replacement property, which we're going to talk about in a bit, how to do that. And then you have an additional 135 days to acquire or to close on replacement property. So the exchange then is capped at a max of 180 days total. This actually could be more or less. We'll get into that in a bit. But typically it's going to be about 180 days. Let's get it finished up there. There we go. All right. So in our chart here, the exchanger, they've identified replacement property. They've identified it from a seller, and they've told the QI this is what they're going to do. So the QI, acting as the buyer, is going to transfer the funds and instructs the closing officer to directly deed the real property to the taxpayer. So looking at our diagram again, the QI has sold to the buyer and purchased from the seller. It's been under the direction of the taxpayer, but the taxpayer wasn't making a sale and a resulting purchase. The taxpayer simply exchanged like-kind real property, received like-kind real property. And then this is really what makes an exchange. They're not holding on to funds. There's an exchange agreement in place, and the QI is really important for this role. All right. As you can see at the bottom, we have the identification period, total exchange period. Let's go into the time requirements. So as we said, you have the 45 days from the start or from the close of the relinquished property to identify replacement property. It needs to be by midnight. And we're going to get into different ways you need to, identify property on the next slide. But here, let's go into, 180 days. So the exchange period, it's a maximum of 180 calendar days. So when I say calendar days, I mean sequential days. So sequential days, meaning weekends and holidays included. So it's a maximum of the 180 calendar days. Or it could be the date of filing for the tax return for the year of the transfer of the relinquished properties, whichever is sooner. So anyone who closes maybe end of October, November, December especially, and then they plan to file their taxes on April 15th, they're going to have less than that 180 days to file, unless they, of course, file for an extension. So we recommend, especially people who are completing exchange end of year, to plan on filing for an extension so that you can hopefully get that full 180 days of doing an exchange. Trick question here. It could actually be more than 180 days. The only way this could happen is a federally declared natural disaster. And the IRS recently put something out that's similar to that due to COVID. It wasn't quite this, it was separate. This being any of the identification periods of the 45th day, the 180th day would be pushed back. And as of this June 1st, it's really not applicable. It was more for anyone, I think it was March, April, and May. So at this point, there's nothing new. We're keeping our eyes on it. I know that the Federation of Exchange Accommodators, it's our trade group, they're lobbying to hopefully get an extension further, especially for places like Northern California, I know is really locked down, New York for sure. And so, it's difficult for people to get out and find their replacement property and complete an exchange. So while the current extension that was put in place isn't applicable at the moment for anyone going into a new exchange, it could potentially in the future if they do extend it or if they put out a new pronouncement. So if you guys are interested in that, I would definitely get on our newsletter at API. We'll go through that contact information at the end. But if we hear something, which we are typically one of the first to hear, we'll let you know immediately. All right, so those identification rules. So before midnight of the 45th day, as we were saying, you need to fit into one of these 3 rules. You don't have to hit all 3 rules. It's like buckets. So if you don't fit into one, you can go into another. And it pretty much goes in popularity from first to last here. So the 3 property rule, most popular, the taxpayer may identify 3 properties of any fair market value. So in this case, think unlimited value, but limited property. All right, on this next one, think the 200% rule, limited value, unlimited property. So for this one, you can identify as many properties as you'd like. So 4, 10, anything, as long as the properties identified do not exceed 200% of the fair market value of the relinquished property. So let's say you're relinquishing $1 million home, investment home. You can identify 5 properties, as long as those 5 properties do not in aggregate, and this is a basic example, but they do not exceed 200%, so 2 million of the fair market value. And of course, we have the last rule here. It's a 95% rule. I've yet to see it in play because it's so difficult to adhere to. But essentially, you can identify as many properties as you'd like, but you need to close on 95% of the value of all properties identified. So to make this easy, we're going to say we got 10 properties of all equal value. And you are successful in closing on 9 of them, but that 10th property, something goes awry, you're not able to close before the 180th day. Well, you closed on 90%, not 95%. So even in this example, even though you just missed 1 property of the 10, you fall out of being able to do a 1031 exchange and you trigger a taxable event. So people typically will sit in 3 property rule or the 200% rule. All right, so identifications, they must be made in writing and they must unambiguously describe the property. So this basically means for most people, just your address that you pull off Google. Sometimes on the title commitment, they'll have the way that they describe the property. That works as well. When we say made in writing, it's not us, it's the IRS. The IRS doesn't really accept an email. They want something delivered, mailed, telecopied, or otherwise sent. So what we see is we'll give you a form, you write it out, you put it into PDF, send it into us. We've even seen someone scribble something on a cocktail napkin, take a picture, send it in. This needs to, of course, be sent before midnight, the 45th day. And typically it is sent to the qualified intermediary. It could also be sent to someone who is not a disqualified person. We're going to get into that in the future. It's a little more complicated in describing who can and cannot do certain things, but typically it's going to go to the QI. We're not going to do anything with this. Thought it'd be good to see though. It's form 8824. This is the form where basically you go through and show your exchange when you're completing your taxes. Hopefully you have a CPA or a tax attorney filling this out for you. And with that, we come to contact info. So my info is up at the top here. You can reach me at 833-756-1031. You can see 1031 at the end. It's kind of fun. And also, if you want to talk to corporate, we have people, 9 to 5 every day. It's California time, who they live to answer your questions. So we do free consultations all the time. Call in, ask us questions. We'll walk through your scenario. The best number for that is 1-800-282-1031, or you can email them at info@apiexchange.com. We also have a ton of forums, different things at our website, apiexchange.com. And it's good to kind of get familiar with different things. We have different links if you want to share them with your client, personalize them for yourself. Even if you just don't know where to start, contact me. I'll help you out. I'll get you where you need to be. When choosing a qualified intermediary, we saw that the QI is the one sitting on the funds. So it might be surprising to you that we are not federally regulated. Qualified intermediaries can really be anyone. So it's important to do your due diligence when you're looking to see who's going to be your QI. In our case, we are a larger QI. I think we're maybe second in the nation at the moment, second or third, something like that. We've done over, as we were saying, 200,000 transactions. We've been around a long time doing this. If you do call that 282-1031 number at the bottom there, there's a good chance you'll even get our president and CEO, Javier Vandestieg, just because he loves answering these questions, and he loves, especially diving into the more complex ones, maybe reverse exchanges, which we'll touch on in the future. But definitely make sure that who's doing your exchange knows what they're doing with the money. So we don't commingle funds. When we take in funds, we put them in bank accounts. We don't commingle with our operating funds. Additionally, we, due to being part of a parent company that's traded on the New York Stock Exchange, we have bond insurance. I mean, just beyond that, it's we have people who've been doing this for, on average, I think 15 years as far as our exchange counselors go. They have teams that work with them. We have lawyers, CPAs. We've seen a lot. We know our stuff. So with that, I think I'll hand it over to Carrie.
All right. If we can turn off the screen share for a second, can you do that for me?
Mm-hmm.
You're driving the bus today. So you touched on a couple things. I was making notes on the side here, but just make sure that we can kind of go back to it. How many transactions can you do before you have to pay capital gains? You touched on it, but can you go into it just a little bit further?
So you can keep doing them. I mean, we'll get into this at some point, but what the IRS cares about is your intent. And so when you're doing an exchange, the intent needs to be you're relinquishing investment for investment, for a new investment, right? And so maybe every couple of years you can keep doing an exchange. So we see people who, they've delayed taxes and maybe they're 5 properties in, but there's not a limit on it, no.
Okay, and then let's just say somebody has a transaction that would qualify for a 1031 exchange in escrow right now. And how much time would you typically, I mean, if it's supposed to close this week, how fast can you respond to get the exchange in place with escrow? Because your escrow officer really needs to know that this exchange is going on.
That's true. That's true.
On behalf of all Pioneer Title escrow officers, we really need to know.
So I heard that pretty much as soon as you know that you want to do an exchange, you definitely will let your QI know and your escrow officer know. Oftentimes your real estate agent know, right? And so we see people who they let us know and they let their escrow officer know about the 1031 2 months in advance, because closing's far out. Typically we can get them set up maybe 2 weeks out is what we like to do. We don't like to rush last minute. There have been instances where someone decides they want to do an exchange and could be 24 hours before. We'll try and do it. We've done an exchange or set up an exchange, I think 30 minutes to an hour before it closed one time. We told the group, we said, hey, go grab a coffee. When you come back, we'll have it ready. We don't like doing that. It's possible. I know you guys don't like doing that either. But I'd say if you can let us know and let you guys know early, I would.
And, I think in the past when I've worked with you guys, that you've had some really great marketing materials for realtors, so that if they do have a candidate for this, that they have some really good information to be able to provide out that can be, and correct me if I'm wrong, that can be branded for that realtor.
That is true. We have something like 170 plus forms on different topics. And the best way to do that is to go to our site and not the best way. Maybe the best way is to contact one of us and then we can get exactly what you need sent your way. But yes, you can do that directly on our website. You can search the topic that you're interested in, say like kind, type in like kind in the search bar. It'll pull up a like kind form. You can customize it for clients. You can add your name. The other day, I helped someone add their logo, that kind of thing. And yeah, you can then pass it along to your clients. So then you know that, excuse me, information you're relaying, it's had someone who maybe knows a bit about exchanges prepare that.
That's great. I really appreciate you doing this with me today. You've got some great information. It's nice to get updated too, because it's been quite a while since I did any classes, workshops on 1031 exchange. So especially with COVID-19 and some of the new things that we've got around the industry, to do a little bit of a refresher. And then you've agreed very kindly to do a series with me, kind of break down the topics, because it is really complex. And so if there's somebody out there that's the investor, maybe they don't do a lot of investing, or maybe there's something in their family, that they can hear one of these videos and call you, not call me on this, call you. And all these videos are being hosted permanently up on my YouTube site, so you can check out that and this rest of my social media. I do my best to push these out to everything from LinkedIn to Twitter to Instagram has portions of it. So for anyone who's spending the time to listen and learn about this topic, I appreciate your attention. It's been a privilege to have that from you. So everyone's so busy, and so I appreciate that. But on behalf of the people that I represent at Pioneer Title, thank you so much for everyone who chooses to work with our teams, chooses to work with me. If you don't have or looking for a different title relationship, I'd love to be that person. Please give me a call at 602-715-5704. I am your Arizona title gal. And Brandon, again, your contact information, because you are the pro on this.
Yeah, definitely give me a call at 183-756-1031 or send me an email, brandon@apiexchange.com. Love to hear from you. Love to help you out, even if it's just informational. But thank you, Carrie, for having me.
Thanks. I'll put my business card, copy of it, down below the video, so you can contact me if you need to get a hold of Brandon, or maybe if you want to slide yours down below too. But thanks, everyone. Have a great rest of your day, beautiful rest of your week, and stay tuned for some of the other stuff I have going on this week. It's going to be a really, really great week. So have a good rest of your day. Like I said, take care.